Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ROBLOX CORP quarterly report. The company, ROBLOX Corporation, offers a range of businesses and services through its immersive platform. These include the ROBLOX client application, the ROBLOX Studio toolset for developers and creators to build and publish content, the ROBLOX Cloud Service, which provides infrastructure and powers the platform. These services cater to users who want to explore 3D experiences and creators who want to develop and operate their own content. The ROBLOX Corp RBLX stock price has skyrocketed by over 121% in the past year due to a combination of factors. The company's consistent earnings beats, robust user growth, enhanced monetization strategies, and positive analyst sentiment have all contributed to its success. ROBLOX's strong financial performances in 2025 were marked by revenue and bookings exceeding expectations in each quarter. The company's user base grew significantly, with daily active users, DAUs, increasing by 70% year-over-year in Q3 2025. This growth was driven by the platform's engaging features and strategic monetization efforts. The company's integration of advanced technologies such as artificial intelligence, AI, has also been a key factor in its success. AI has enhanced game development, automated content creation, and improved safety and discovery features on the platform. Positive analyst upgrades and outlook have further boosted investor confidence in ROBLOX's growth trajectory. Several financial institutions have upgraded their ratings and expressed optimism for the company's future, citing its strong position to gain market share and growing user engagement. Overall, ROBLOX's stock price has surged due to a combination of strong financial performances, robust user growth, enhanced monetization strategies, and positive analyst sentiment. The primary drivers of revenue growth or decline for a company can be categorized into several key areas. Regulatory and compliance risks, such as changes in laws and regulations, trade wars, and fluctuations in exchange rates, can significantly impact revenue. User engagement and retention are also crucial, with factors like user base growth, effective competition, and successful development of new features influencing revenue. Security and safety risks, including security breaches and unauthorized transactions, can lead to a decline in revenue. Financial and tax risks, such as changes in tax laws and regulations, digital services taxes, and indirect tax reform, also pose significant threats. Operational and strategic risks, like acquisitions and investments, and market and economic risks, including uncertainty regarding tax laws and regulations, fluctuations in currency exchange rates, and general economic conditions, can further impact revenue. Ultimately, a company's ability to adapt to these risks and capitalize on opportunities will determine its revenue growth or decline. Net income and profit margins. A decline due to operational pressures. The company's net income has seen a decline from $924.4 million in 2022 to $935.4 million in 2023, indicating a downward trend. This decrease can be attributed to several factors. Firstly, increasing operating expenses have put pressure on the company's profit margins. Despite efforts to invest in developer, creator, and user experience, as well as security measures, these costs have not been offset by corresponding revenue growth. As a result, the company's profit margins are expected to remain low due to seasonal demands and fluctuations in quarterly results. The focus on long-term growth has led to increased expenses, which have contributed to the decline in net income. To mitigate this trend, the company must find ways to balance its operational costs with revenue growth, ensuring a more stable financial future. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. The net cash provided by operating activities has increased substantially from $637,825 in 2024 to $1,189,360 in 2025, demonstrating a positive trend in the company's operating cash flow. This increase suggests that the company is becoming more efficient in managing its resources and generating revenue, ultimately leading to improved financial health. The company's debt level and interest expenses have remained relatively stable over the past year. While there are some minor fluctuations, such as a slight decrease in long-term debt and a small increase in interest expense for certain periods, these changes do not appear to be significant. The total debt has remained stable with only a slight decrease due to fair value changes. Similarly, interest expenses have decreased by a minimal amount of $66 at times, but overall, there is no indication of any substantial change in the company's debt level or interest expenses. The financial performance of the company varied across different regions and segments in Q3 2025. Notably, several countries performed poorly, including the Republic of Turkey, certain Middle Eastern nations, Cuba, Iran, North Korea, sanctioned areas of Ukraine, Russia, and Belarus. On a more positive note, there were some notable changes in the way international markets are reported. The Rest of World segment now includes Xbox users, while geographic regions are broken out by country. This change provides a clearer picture of the company's performance across different countries. In terms of specific numbers, 83% of daily active users, DAUs, and 40% of revenue came from international markets in Q3 2025. The US and Canada region accounted for 17% of DAUs and 60% of revenue during this period. The management of this company is signaling a cautious outlook for the future. They expect expenses to increase as they invest in growth initiatives, which may lead to lower profitability in the near and medium term. The company also faces significant regulatory risks due to potential restrictions on its revenue and business model. Additionally, there are concerns about intellectual property claims and financial risks stemming from inflation, geopolitical developments, and macroeconomic conditions. Management is prioritizing long-term growth over short-term financial results, but this approach comes with uncertainty. They intend to retain earnings to finance operations and expansion, rather than paying dividends or distributions. Overall, the company's strategy is focused on navigating these challenges while investing in its future growth. The company's financial summary reveals that it has never distributed any cash dividends to its shareholders. This indicates a focus on retaining profits for future growth and development rather than distributing them as returns to investors. Concerns about inventory buildup and supply chain disruption exist. The company faces potential issues with inventory buildup and supply chain disruption. Suppliers of data center capacity and certain equipment components may experience disruptions or delays, leading to shortages and delivery delays in the technology equipment industry. Furthermore, supply chain constraints for servers and other networking equipment required for operations have resulted in disruptions and delays. These concerns highlight the need for careful management and contingency planning to mitigate potential risks and ensure business continuity. That concludes the financial summary for ROBLOX CORP. Feel free to comment below, and I will be happy to answer them when possible.